Good morning, everyone. My name is Tim O'Brien, and I'm the Global Head of Diversified Industries here at DBRS Morningstar. With me today are Rohit Kumar, Assistant Vice President on the Diversified Industries team, and Eduardo Danieli, Assistant Vice President on our European Corporate Credits team. The Diversified Industries team is responsible for rating credits in the global consumer, industrial, transportation, and logistics, services, and technology, media, and telecommunications sectors. The team consists of a dozen analysts, including 2 team leads. The European Corporate Credits team is responsible for our European-based corporate credits, and we work very closely with Eduardo and his colleagues. We are very pleased to be meeting with you this morning to discuss the topic of sustainability-linked bonds in the global airline sector. I will kick things off with an introduction to our overall approach to environmental, social, and governance risks. Then Eduardo will discuss sustainability-linked financing in general. And finally, Rohit will discuss the same, but specifically as it relates to the global airline sector. Note that both Rohit and Eduardo have published commentaries on these subjects, so please feel free to download these from our dbrsmorningstar.com website if you have not already read them. There will be a Q&A session at the end, so feel free to log your questions through the chat at any time. When we developed our formalized approach to environmental, social, and governance risk assessments, we relied on certain important principles, including consistency and transparency. I'd like to comment on how these principles are manifested in our approach, but first, let me explain why I refer to the formalization of the approach. In the early 2000s, the United Nations launched a corporate social responsibility initiative that evolved into today's ESG conceptual framework that has been widely adopted by corporations, governments, and the global investment community. We refer to the formalization of the ESG framework in our ratings because the risks that we now explicitly highlight within our formal framework are those that we had already been incorporating into our diversified industries ratings, but in other ways. Examples include environmental regulatory risks, such as emissions control requirements in the auto sector, or social risks, such as the potential for negative community reactions to faulty or dangerous consumer products, or governance risks among private companies that are more prone to less robust board independence and professional oversight. All of these types of risks and many others are now captured in our formal ESG framework. So let's get back to the guiding principles. Consistency. At DBRS Morningstar, we evaluate and incorporate ESG risks in the assessment of credit ratings across governments, financial institutions, corporate finance, and structured finance. We have taken a global issue and provided a global solution, looking at ESG with a single approach across product areas and countries. Note that while the approach is the same across these different groups, the exposures are not, with corporate finance being the most exposed. Transparency. Today's presentation is just one of the ways in which we communicate our approach and the way specific ESG factors affect ratings to the market. As a starting point, I would encourage everyone to peruse our dbrsmorningstar.com/ESG microsite, which articulates our overall ESG approach, presents overviews of how ESG factors are considered across the government, financial institution, corporate finance, and structured finance analytical groups, and presents lists of prominent ESG risk factors under each of the environmental, social, and governance categories. For a far more comprehensive and detailed treatment of how ESG risk factors affect ratings, I would draw your attention to our DBRS Morningstar criteria, which is aptly titled Approach to Environmental, Social, and Governance Risk Factors in Credit Ratings. This criteria includes a list of the 17 ESG risk factors we consider in our analysis, breaks down when they might be applied, and offers examples of situations for which they may be activated. For example, carbon and greenhouse gas costs is an environmental risk factor. An airline could face rising costs due to carbon credit purchases to offset its CO2 footprint. Indeed, as Rohit commented on in his research, the International Air Transport Association expects over 90% of net emission reductions through 2030 to be achieved via carbon offsets. Product governance is a social risk factor. Selling faulty products and services can lead to high-profile fines and negatively affect the company's franchise value. For example, in April 2023, we commented on the record proposed $9 billion settlement offered by Johnson & Johnson to settle all claims that its talcum powder products were carcinogenic. As we noted in our commentary, the claims highlight how selling products that are proven to cause harm or alleged to cause harm to consumers could result in costly litigation, erode consumer confidence, and have a negative effect on a consumer product company's overall credit risk profile. Corporate or transaction governance is a governance risk factor. The highest quality boards have a majority of independent members, a diverse group of people with a variety of relevant skill sets, ideally with ample female representation, audit and compensation committees that are solely constituted of independent members, and a board chair that is not the CEO. Private companies, especially those that are family-run, frequently have boards without such characteristics and can have a dominant personality. This leads to weaker oversight and greater risk of a misalignment of interests across stakeholders, especially as it relates to the best interests of the lenders. Finally, let me spend a bit of time on the mechanics of how we incorporate ESG risks into our ratings. If you have read any of our credit reports over the last year or so, you will have seen that we include our ESG checklist in each one as a matter of course. For example, in our May 8, 2023 AB Volvo report, you will note that the ESG checklist highlights carbon and GHG costs as an ESG risk factor. This report further defines this risk as having a relevant effect. As defined in our ESG criteria, a relevant factor is an ESG factor that may have some credit impact, but is not sufficient to change the rating or the trend on the rating. This means that there is some fractional notching, but not enough to move the rating or the trend. On the other hand, a significant factor is an ESG factor that changes the rating or the trend on the rating. Once these ESG risk factors have been identified and quantified in the ESG checklist, the notching impacts are incorporated into the final ratings of our credits through the overlay mechanism, something that you can read more about in all of our public corporate methodologies. Finally, one last note regarding climate change. Although it is just one of many subsets of ESG risk factors, it is clearly an extremely important one. Therefore, we have recently published a commentary describing how we incorporate climate risks into our ratings. The commentary was published on May 2nd, 2023, and is called ESG Climate Risk and Credit, and is available on our website at dbrsmorningstar.com. We have also started publishing a series of climate change commentaries focusing on how this issue may affect different sectors. Please take a read of our auto sector and oil and gas sector climate change impact pieces. Thank you for your attention, and with that background in place, I am pleased to hand things over to Eduardo Danieli, who will be discussing sustainability-linked bonds in general, and then we will hear from Rohit Kumar, who will speak about sustainability-linked bonds in the airline sector. Eduardo?
Thank you, Tim. So I will start with a brief introduction on sustainability-linked bonds, or SLBs. But just to keep in mind that it's because there are more available information. But keep in mind it's also a private debt story, so there are a lot of sustainability-linked loans in the market. So what is the main characteristic of SLBs? Similarly to traditional bonds, is the fact that the issuer can use the proceeds for general corporate purposes. And this is really a striking difference compared to other forms of sustainable financing, such as green bonds or social bonds, that allow the issuer only to invest in specific projects. And therefore, SLBs are really an alternative to conventional bonds. And virtually a company can have just SLBs in its balance sheet if it wanted to. So what are the differences compared to traditional bonds? The main one, as you know, is that with SLBs, the companies commit to specific ESG targets or KPIs, and a failure to achieve those targets will mean there is a financial penalty for the company. So in the most common example, a company will issue an SLB with the target to, for example, reduce carbon emissions by 30% by 2027, and failing to achieve that target will mean there is a step up in the coupon of 25 basis points. So given this risk, why a company should issue SLBs? So we think there are three main advantages in this instrument. The first one being boosting ESG credentials. So with an SLB, the company is publicly committing to ESG targets, and there is a difference between other commitments to ESG targets because in this case, there is a clear link to a financial penalty. So there is a financial incentive to achieve those targets. And this is not only good in the eye of investors, but also towards other stakeholders of the issuers. Another element is the possible reduction of coupon payments, modest reduction. It's a bit debated, but it seems like on average there is a reduction of 29 basis points in terms of coupon rate for a company issuing SLBs compared to conventional bonds. Other analysis, one recently from Barclays, for example, didn't find this difference, this greenium, but we think that on average it's present, although modest. Another element, another advantage of SLBs, and you will see here on the right of the chart referring to that, is to maintain for the issuer healthy access to funding. This is a bit anecdotal, but we have seen in the last 10 months some of the biggest SLB issuances in Europe, and the chart is referring to that, that were well oversubscribed. Because effectively the company with an SLB can address both the traditional bond investors, but also investors with an ESG target in its core strategy. So you have effectively a bigger pool of investors. And as well, this is more relevant for the private debt market. Banks nowadays, big banks nowadays, they have a certain target of amount of sustainable finance they want to lend to. And therefore, whenever there is, for example, the time to refinance a revolving credit facility, it's likely a bank will go to the issuer and ask if they wanted to add some sustainability-linked features to their debt. So going to the next slide. So there are not only positive aspects linked to SLBs. As you may be aware, there are a lot of criticism around this type of instruments, especially in recent months. One of the main one is the fact that a lot of these ESG targets appear easy to achieve for the issuer without much investment. We have seen in many examples that these ESG targets, and usually our carbon emission reduction, are almost entirely achieved at the time of the issuance. This is possible because usually a reduction of CO2, carbon emission, is calculated with a baseline years of 2 to 7 years in the past. So we have seen a couple of issuances in January 2023 that were committing to reduce CO2 emissions by 40 and 50% by 26 and 27. But the baseline year was 2015 and 2017. And at the day of the issuance, almost over 60% of that target was already achieved. So it doesn't seem like that difficult to achieve for the companies. And that's because as well, companies have already progressing towards reducing CO2 emissions. There are also some positive examples in the market. For example, recently Pernod Ricard, one of the biggest alcoholic beverage companies in the world, has issued SLB bond with some challenging ESG targets. Another criticism is around the fact that the financial penalty is not that relevant. And we have a chart here on the right side of the slide. So usually the step up in coupon, which is the financial penalty, is 25 basis points. And this is flat across the coupon yield spectrum. So you will have a company that normally can issue a bond at coupon rate of 0.5%, for example, which can incur in a step up of this 25 basis point, which is a 50% increase in a coupon rate. But the same 25 basis point apply for a company that normally issues at 5%. So it's not that relevant for more high yield companies and issuers. And finally, there are some criticisms around callable features of these SLBs. So many of these instruments have a call option, and the call option date is usually before the possible step-up penalty occur. So a company that is expecting the risk to not achieve the ESG targets can well call back the bond before incurring in any financial penalty. So taking that into account, our view is that, I mean, the market is still young and it's self-regulated. The first issuance came out in 2019 and was by Enel, Italian utility energy company. And the market is adjusting itself year over year. We have seen nowadays, as the market mature and the liquidity in the market is probably dropped compared to previous years, the investors are become more demanding. And as well, investors are well aware of this criticism around nowadays. So we think they will demand more ESG targets in terms of challenge, more challenging ESG targets, and as well probably a step-up coupon, which is linked and correlated to the coupon yield of the company. So the financial penalty becomes more relevant. We think that one of the key for the future success of this market is the fact to include carbon-intensive sectors such as airlines, and Rohit will talk about it in a minute. We think that because including these sectors will be beneficial, given that carbon emission reduction is the main focus usually for this type of instruments, and this is positive for a problem we are facing all now. It's climate change. I think with this, we can open up for questions for this part of the slides. Tim, I don't know if there are any questions.
Yes, thanks, Eduardo. We do have a question on access, and you had raised the issue of access in your comments. The question is more geared towards the airline sector, so I think that we're going to come back to that with Rohit. But for now, Eduardo, can you just discuss what is the overall credit impact of issuing SLBs?
Thank you, Tim. So, as I said, because ESG targets are not that challenging on average, and so they don't need additional investments, additional capex from the issuer, and as well, the financial penalty is not that relevant. As of now, the credit impact is more or less neutral. There are some positive aspects, probably more than anything else, is the access to funding in this period of low market liquidity can become more relevant. But overall, we don't see a striking impact for this kind of instruments. What we think is that in the future, as the market matures, as I said, that this will become more and more relevant, and I think this will fit into much more in our credit analysis and credit ratings.
And is it likely then, as this evolves through time, that the credit issue will likely be those that are not participating, and that those that are participating with these kinds of instruments, that becomes sort of table stakes in these sectors for which these instruments are relevant? Is that the right way to look at it?
Yeah, I think as well. You know, if you're into a sector, you're an issuer, and you have your peers issuing this type of instruments, and that were received by the market, so they're all oversubscribed, you might find more difficult to get access to funding. And as well, you know, if this company started with some ESG commitments before you, it takes more time, it takes more capital investment to reach the same level. So I think will become more relevant. We need to have some champions in each sector to kind of lead the way for the others as well.
Mm-hmm. Great. Okay, thanks, Eduardo. So with that, let's turn things over to Rohit. for comments that are more focused on the global airline sector. Rohit?
Thanks, Tim. So hello, everyone. So turning to airlines, as you may be aware, air transport contributes around 12% of the total transportation sector emissions, and this is second only to the automobile sector. Now, airlines have a strong focus on cutting emissions in recent years, and their ultimate target is to achieve net zero by 2050. There are various ways the airlines are aiming to decarbonize, and we will discuss that later in our presentation. But despite all these efforts, airline sustainable financing activity is currently very low. Airlines have raised only about $5 billion in sustainable financing since 2018, which is only a fraction of their overall financing needs. I mean, just for comparison, global airlines raised around $340 billion alone in 2021. So another major reason for this low activity, we think, is because green bonds, which traditionally have been the most common form of sustainable finance, do not fit airlines' business model. This is because the use of net proceeds is restricted to environmental friendly projects, and airlines mostly need funds to finance aircraft purchases, which is actually not a green activity. But now, since airlines need funds for sustainability initiatives and also as a capital intensive industry, airlines need to maintain access to capital at the time when investors are switching focus towards sustainability. We expect that overall sustainable financing activity within the sector is likely to pick up. Now, in the absence of green bonds, as I discussed earlier, sustainability-linked finance falls in a sweet spot. This is because it does not restrict the use of net proceeds, but rather link financing costs to ESG targets. Sustainability-linked finance has also been the most common form of financing so far within the airlines, most common form of finance within the airline, sustainability financing, and this contributes around 70% of all the sustainable finance transactions. But as I mentioned, the overall volume is still very, very low. Transition bonds, which were introduced even more recently than sustainability-linked bonds, are also a viable option because they allow issuers to finance projects which reduce carbon footprint, and for airlines, it could be the fleet modernization. But again, there haven't been many transactions in this area as well so far. We think sustainability-linked bonds and transition bonds are likely to emerge as key instruments of choice for the sector within the sustainable financing ambit, as they fit airlines' business model very well, and we expect the activity to pick up significantly in coming years. Now, there are different ways airlines would benefit from sustainability-linked bonds or transition bonds, and these are aligned with what Eduardo mentioned in his presentation. So firstly, these financing instruments could help airline sector maintain access to funding at a time when investors are switching focus towards sustainability very actively. Secondly, it could boost the ESG profile of airlines. Thirdly, it could help airlines reduce cost of funding, as there's an evidence that there's a slightly lower coupon on these type of bonds compared to equivalent traditional bonds. Now, this is not always the case, but there is an evidence. Lastly, we also think that airlines that are proactive in raising sustainability-linked bonds and abiding by their KPIs might benefit in the medium to long term when regulators take more aggressive actions to decarbonize. This is because these airlines will probably be a step ahead in their decarbonization targets, so they will benefit. So coming towards the next slide, so KPIs. So we've also studied medium-term targets for airlines and also KPIs under their sustainability-linked transactions. There have been a wide variety of targets that we saw within airlines, and our overall impression was that a lot of times these targets are not ambitious enough to achieve the long-term target of net zero. For example, oftentimes targets under sustainability-linked bonds are set as carbon, like reducing the emissions intensity, which is emissions per revenue passenger kilometers. But with expected growth in travel activity, we saw that sometimes the absolute net emissions can end up being even higher than the baseline period. We have given the detailed tables about our survey of some leading airlines and their medium-term emission targets. This can be found in our report, and this can be accessed on our website as well. Now, there's also a valid reason for the medium-term KPIs to be relatively less aggressive within the airline sector. This is because airlines have limited avenues to decarbonize. The International Air Transport Association, known as IATA, expects over 90% of net emission reductions till 2030 would be achieved via carbon offsets. Over the long term, medium to more long term, sustainable aviation fuels is expected to become the major source of net emission reduction, and it would contribute around 65% of total net emission reductions by 2050. This is as per AADA. Hydrogen and electric powered aircrafts are also likely to contribute in the long term. However, there are still significant challenges like high cost of production, heavy investment requirements, technological hurdles, and therefore sustainable aviation fuels and new technology aircrafts are at least around 10 years away from wide-scale adoption. Now, overall, we think KPIs under the sustainability-linked bonds are likely to get more aggressive as investors become more demanding, and also options like sustainable aviation fuels and newer technology aircrafts become available on a wider scale. There may also be a regulatory push for aggressive KPIs. This is because to avoid any greenwashing, because there have been concerns lately about that as well. Turning towards credit implications, we do not foresee a material near-term impact on the credit ratings in the sector. Due to fewer avenues to decarbonize in the short term, there are limited chances of any material financial burden being imposed by the regulators. However, over the medium to long term, we think airlines that fail to meaningfully tap this sustainable financing market and those that do not adequately focus on aggressive decarbonization via these newer technologies would likely suffer from liquidity challenges and also possible negative rating actions. And with that, I'll hand over back to Tim.
Great. Okay. Thanks, Rohit. So I think there are some really important takeaways there. I think the expectation of SLBs and transition bonds really being the dominant this type of financing compared to green bonds in the sector is an important takeaway. And then also what I think we can describe as regulators being quite reasonable when you talk about the inability for this sector to make dramatic improvements beyond the carbon offsets that they will need to do in sort of the shorter term while these technologies are being developed. Is that the right way to look at this temporal dimension as you sort of look short, medium, and long term, and then sort of extrapolating beyond that? How do you feel about this target of achieving net zero by 2050?
Yeah, thanks, Tim. So I think you summarized it really well. So so about the target to achieve net zero being realistic. So if you ask me if there is a possibility for the sector to achieve net zero, I would say yes. But if you ask me if it's easier for the sector to achieve this target, then absolutely no. Airline is a very challenging sector to decarbonize, and the progress made so far is very little compared to what is needed. I mean, as I mentioned in my presentation, the development of sustainable aviation fuel and new technology aircraft is very important for the long-term targets. In my view, I think there are three factors that will ultimately drive the success for the sector in achieving net zero. Number one, the support from the governments. It is very important that there is a coherent effort from international governments to help the sector achieving this net zero target. This may include subsidies or building regulations that promote decarbonization. Second would be the support from investment community. Decarbonizing the airline sector is very capital intensive task. And there are estimates that it will cost about $175 billion annually to achieve this target. So the investment community also needs to support the sector in achieving this target. The third will be the overall pace of technological advancement. Now, the timeline that is set, that is 2050. Now, a lot of these technologies are in early stages. So how the sector will advance and how quickly it will do the technological advancement, only time will tell. But this is something that will drive the success of the sector, that how quickly they are able to achieve the milestones within that technological advancement framework. So so this is.
That makes sense. And I mean, I think that airlines, the airline sector would have to be categorized with some of the other tough nuts to crack, if you will, as far as these ESG issues are concerned, along with things like cement production and shipping. These are the sorts of this is certainly not the low-hanging fruit of ESG, of addressing ESG issues. Okay, so we are going to transition to our Q&A portion of this presentation. So please do use the chat feature in order to log your questions. As I mentioned, we did have a question earlier, and so Rohit, I'm going to come back to you. The question is basically, to what extent going forward will all airlines essentially be compelled to use sustainability-linked features in their debt raising just in order to get access?
Yeah, so thanks. I think, I mean, as I said, I mean, we expect the sustainability-linked financing activities like pick up. I mean, if you go over the medium term, I think we will see more of these features baking into airlines' sustainable financing transactions. I mean, overall financing transactions. Eventually, majority of these could be having some sort of sustainability-linked features into them. I wouldn't say like 100% of them would have it, but still, I would think the majority of them we expect that could have these kind of things baked in. But this will be a gradual process and will only take place. I mean, only kick in with time.
Great. Okay. Thanks for that, Rohit. And Eduardo, maybe coming back to you, we did discuss a little bit about the regulators in the airlines sector. Can you maybe talk more generally how SLB instruments are regulated?
Thank you, Tim. So basically, there is really little or no regulation regarding these instruments. A lot of instruments, you can call them sustainability-linked notes, just having few features. And as well, there is no regulation in regards to what kind of ESG targets you should have in place. There is, although, there are some best practice. There are some principles. The ICMA published in 2020 the guidelines and principle to have best practice in the market. And some of these SLBs, they follow these practices, but really there is no regulation. Something we're seeing, and this is quite recent, for example, the FCA, the UK regulator, is now probing the market, is inquiring the various actors of the market, the banks, insurers, and so on, and because it wants to understand these concerns regarding these ESG targets being easy to achieve, and there is this risk of greenwashing. So, not only the FCA, but a lot of others, other regulators are looking into this market. As the market matures, as the market becomes more relevant, the volume increases, and we think that sooner or later, probably sooner, we will have some form of regulation. But this will be positive for the market, as will be more trust among investors in investing in this kind of instruments. I think this will eventually help the markets to grow.
It seems like there's clearly a theme here where you both mentioned the issue of these KPIs being fairly easy to achieve at this point. So Rohit, maybe going back to airlines specifically, can we talk a bit about penalties? Do you think that the coupon step-ups in the airlines' SLBs are sufficient to penalize them for non-performance? And maybe a broader issue being, is that the main challenge that airlines face with this kind of financing going forward? Or is there something else that we should be drawing everyone's attention to?
Thanks, Tim. So this is an interesting one. So generally, the coupon step-ups that we've seen in airlines are somewhere around 25 basis points for non-performance, and this is in line with what Eduardo mentioned about the overall sort of sustainability-linked bonds area. Now, I think these are certainly penalizing the company, but they not be very detrimental as someone would expect, and there are various debates around that these should be higher than what these currently are. However, in my view, the bigger issue, I think, is that the KPIs are not very difficult to achieve at this point in time, at least. So I think going forward, the KPIs would rather get more aggressive. Even in my view, if you keep the step-up coupon step-ups at current level and get KPIs more aggressive, I think it will ultimately result in much greater progress towards decarbonization. That being said, I would not be surprised if the coupon step-ups go up from these levels. That they could go up slightly above from these levels, but I think the bigger issue we have is of the KPIs being less aggressive than they are. And as I mentioned, I mean, I expect these to get more aggressive as the market matures and other sort of alternatives within the airline sectors become available.
That's helpful. So I see what you're saying. It's not really the penalties that are the main issue. The main issue will be the step up in the KPIs themselves. That makes good sense. Eduardo, we are anticipating obviously an increase in SLB issuance going forward. We've been very clear about that in general, but also in the airline sector. So how do you explain what's happened in 2023?
Yeah, I mean, we had in 2023 a reduction in terms of volume of this kind of instruments. That's true if we look at Q1 2023 compared to Q1 2022. There was a reduction by 70% in terms of new SLBs in the market. And what we need also to look at is the rebound that happened. For example, in the last 3 months of 2022 compared to the first 3 months of 2023, when in 2023 increased by 46%. And the fact is, the problem is that this market is not immune from the general corporate bond market. We have seen some volatility in terms of new issuances also in the general market. For example, high yield corporate bond market globally went down in terms of volume by something around 75%, if I recall correctly, 2022 compared to the previous year. And therefore, as the market, the liquidity market has deteriorated, also we have seen less SLBs, but we're pretty confident that as the market will rebound, as the new volume of issuance will rebound generally, this type of instrument will grow and will grow more than general markets.
Got it. So the recent trend doesn't affect our long-term view at all.
Yes, probably there is also an element of, we have seen a lot of criticism in the market, especially regarding ESG. Now there is the regulators want to look into it. Probably also issuers are kind of reassessing what kind of ESG targets they need to put out there. And I think it's temporary, it's a pause. And I mean, it's probably more welcome if the market adjusts, if we will see more challenging ESG targets going forward.
Great. Okay, and then our final question again relates to the airlines sector. So Rohit, we'll come back to you. How would the scheme known as CORSIA, the Carbon Offsetting and Reduction Scheme for International Aviation, help the sector in achieving decarbonization goals?
Thanks, Tim, for the question. So I think CORSIA is very important for the aviation sector decarbonization target, at least in the short to medium term. I mean, not at least, but actually in the short to medium term. As I mentioned in my presentation earlier, over 90% of emissions reduction till 2030 are expected to come from carbon offsets. So CORSIA sets a good framework for that. And I mean, the carbon offsets would be really important in the short term for the sector to reduce their net emissions. However, CORSIA is not the answer for the longer term goals, which is the net zero by 2050 targets. This is because CORSIA, the net reductions through carbon offsets can only help up to a certain point, and after that, it will actually be the absolute reduction in the core activity of airlines that needs to come down. So efforts around technological advancements should continue and should be further ramped up to build some such viable alternatives for the sector so that the emissions can be cut significantly. So overall, yes, CORSIA is important for the short to medium term targets, but it's not the answer for the long term goal.
Got it. Okay, well, thanks for that color. Okay, well, that brings us to the end of the Q&A session. So with that, I would just like to draw everyone's attention to some of the research that we have out there, to which we've referred throughout this presentation. If you go to our website, you'll see both the research pieces that Eduardo and Rohit have published. We've got the ESG climate change pieces to which I referred earlier, and then of course all of the criteria and methodologies that I referenced in my earlier comments are there. So Rohit, Eduardo, thank you so much for your presentation and for your research. And everybody who joined today, thank you very much. We appreciate your interest, and feel free to reach out to any of us if you have any questions. Have a great day.